Hi guys, welcome back to another YouTube video. This is quite an exciting video and I've been waiting to make it. It's been requested a lot for this video to go over the model that I use that isn't the unicorn model for once. I'm finding more consistency with this model and it kind of just makes price make more sense in a way for me. But before we do get into that, I need to go over some context. So we're going to jump back a day. So today's been Friday the 20th, a week before the Christmas holidays. But I want to jump back to Thursday. So FOMC on Wednesday the 18th of December, we had a huge 1,000 point move down. I was expecting a inside day bar on Thursday, which we did get. I documented this, guys, all on my Discord, where you can check it out in the description. Join for free and get my kind of daily analysis as we go into each week. So with that being said, going into Friday open, I was expecting a reaction from this daily order block here on NQ. So I wanted to see, and as well, guys, as I said, I would also documented this. I wanted to see a low be put in, and then potentially come back up higher and close the day here. So put in the low, and then a high, and then a low. So open, low, high, close, um, and then that's what I was expecting. Okay, because we have a internal range of liquidity. We have a bearish FVG, sorry, over here. So that's what I was expecting. And also, if you understand TGIF, which is a weekly profile, Monday puts in the high, Tuesday, Wednesday, Thursday expands lower, and then Friday will return back into 30% of the weekly range. So now we're on the 1 hour time frame where I'm going to show the model. Given that we are at our daily POI, the model is quite simple. This hourly candle's low, if we're to go and pretty much trade off the low to go higher, I need to see this 7 a.m. candle close on the 1 hour, take this low and close back within the range. So let's see what happens. This 1 hour candle now takes this low and closes back within the range. Step 1 is now confirmed. We can drop down to the 5. So now that we're on the lower time frame where we're going to enter a trade, which is the 5 minute, this hourly candle closure here, we can identify that we have a change in state of delivery, which is step 2, identifying a change in state of delivery, which is so important in this example. And we need to identify as well, do we have a draw liquidity? We can use these equal highs or the high of the range as a draw. And while we're here, we will mark out standard deviations. You can use the wicks, wick to wick, or body to bodies. We'll use the wick to wicks here. And we'll also mark out our -2 to 2 standard deviations, which is our retracement zone. Now we have this all marked out, you can enter a trade with this candle closure, confirming the change in state delivery, like so. And you could target the draw or 2R, whatever you want to do. This gets you 2.63 RR, but your stop loss is quite big, very big actually. I typically like a 20 to 30 point stop loss. Any more than that, and then it's really just out of discretion. But that's a setup in of itself. Now, a part of this model is to understand that you need PD arrays that are tapped into and closed over. This works when the market is trending, obviously, because this is now a supporting order block that you would hope for price to use to push off higher. For this order block to be invalidated, price would have to take out this swing low. So in essence, you could take a trade after this candle closure here, put your stop at the low, and you could target either 2R, this low resistance liquidity, this high, or the top of the range. So we'll see how this works in the example. Or you could target. Now going forward, it's also vital that you mark out 50% of the wick that we closed within the range. You wouldn't want to see price disrespect 50% of the wick. So this entry is kind of risky, but let's see how it plays out. We also have news at 8:30, so I wouldn't really advise trading before the news release. You'd get entered here. and then news comes out, and we will just slowly see what price is doing. We have now a fair value gap here, another PD array. We tap this PD array, close over the opposing candle. That's a supporting order block for me. I could frame another trade like this, target the higher time frame, draw. We get entered here. We do consolidate a little bit. New York open takes us to that draw. We're now at -2.5 deviation, but both of these have gone pretty much to TP. This is a 14-hour trade. This is a 3.4-hour trade. Now, before I go ahead into New York, I do want to point out one or two things. We have an order block here and a change of state delivery, so you could potentially use this to find an entry off for price as it taps an order block. This is an order block, so obviously coming into it, closer above, you could trade off it through here. So this one actually gives you an entry, closure here. You could enter here, your stop would be at this low. You as well target the draw to R in that scenario. Now, this is a point where we are either going to retrace or we will go to max extension at 4R. At 4, sorry, -4. I want to note that this is our daily FVG. And if you saw the start of the video, that's what I'm looking for price to do. So let's see how price develops going into New York. We do end up taking out the low of this order block. However, we do respect this low. We'd never go below it. As you can see, New York expands to where? Our daily objective, which is the daily FEG. And then we can play out price for pretty much the rest of the day. I wouldn't be interested in this after my daily FEG gets triggered, and that's the day wrapped up. Now, if we put on my time frame candles, as you can see, this is the Friday. We open up, we come down to my low, and then we get a New York reversal. Well, actually, we get a pre-New York first. We get like a 7 o'clock reversal, but it is a reversal. New York expands to our daily objective, and that's everything in the model pretty much. I hope that was kind of like insightful to today. There are also some bits where you can mark out, like, for example, how 8:30 open treats price, as well as midnight. When we get to midnight, we have this consolidation. As well, standard deviations -2, 2.5, quite an important thing. But yeah, any questions you guys have regarding this, feel free to message me on the Discord. So you can join, the link will be in the description, it's absolutely free. So yeah, with that, take care guys, bye bye.